And welcome back, everybody. You are listening to KHTS, your hometown station, AM 1220, FM 98.1. We are on Facebook Live, and we are also on the web at hometownstation.com. I just want to, I should appreciate my guests coming on, and they really have some great information. And if you have, if you did marketing, I cannot recommend Brianne DeMack more. She's been fantastic, and Jeremy at Resurgence IT has been really has helped our business really move forward. So I would definitely suggest reaching out to them. But I did want to talk about when Fred and I were talking about the accessing that equity in your house. Right now is such a great time to do that. I really have been inviting or in telling some of my customers that they bought the house and $500,000 10 years ago. They paid it down to $350,000 but the home's worth $800,000, $700,000. So they have all of that equity just sitting there, not really working for them. And with interest rates so low as they are right now, I've really been telling people, now is a great time to do a refinance, pull some cash out. Maybe you do a refinance for 3.5, 3.625 with an APR of 3.7, something like that. But maybe you take that $50,000 or $100,000 and you invest it in some mutual fund somewhere. And I know the market's going crazy right now, but over the time, if you look at over long term, over the last 10, 15 years, a lot of these big mutual funds, your Fidelities or your Dreyfus or your Putnam or Frank, any of these ads you see on TV while you're watching tennis and golf, when you call these guys, they are definitely returning 8, 9%. So you're paying 3.5% for this money, but you're making 8% on that money, right? So you're making 4.5% on that money for nothing, not doing anything, and both very, very solid investments, very, very safe investments. So, it's really something to think about that, over the long term, over the next 10 years, if you were to, invest $50,000 and just leave it alone, you would be unbelievably happy, and it's really not going to change your mortgage that much, So, that's definitely something to think about, because if anytime you can take inexpensive money and use that to pay off expense, like investing is a great idea, but paying off those credit cards, paying off your car, even paying off those student loans. Those are things that now is the time to do this. Now, if interest rates were 6 or 7%, we wouldn't be having this conversation. This only works now because interest rates are so low, but because they are, it's something to think about. It's definitely something you want to definitely think about. So, and the way to do that, call your loan officer. We have some great loan officers. Obviously, we work for American Family Funding, Fred and I, and we have some other great loan officers in our place too, Jake Young and Fernando Gauna. Steve Schaefer, he does our reverse mortgages for us. And then we have Jalynn, who actually lives out in Palm Desert area, so she can definitely help you out there. But then we also, in our community here, there are great loan officers. Talk to these guys, and they can really help you, take this time and use some of that equity to help you build your long-term wealth and your retirement. So it's definitely something to think about. And, heck, if you want to get in touch with me, my email is david@affloans.com. My phone number is 661-505-4368. Anyway, well, I guess I made it through. It definitely was not an easy one, that's for sure, and I'm going to make sure Fred's here next week. I'm sweating a little bit, I'm not going to lie to you. But anyway, thanks everybody for listening. I certainly do appreciate it. And again, you've been listening to KHTS, your hometown station, AM 1220, FM 98.1. Thanks again. Have a great week. Stay safe out there, everybody.